The past 12 years, we have been seeing China trying to sell off its US debt. And it has been plummeting from since 2013. China was holding almost $1.3 trillion. And as of now, it's holding around over 700 billion US dollars. But the biggest question would be like, why won't China sell its US debt all at once? Why won't it just come up one morning, China, and sell off all its US debt and once and be like, boom, I'm done. Well, in this video, we're going to try to understand why China cannot just sell off all its US debt at once and why it cannot really do it in this video. Well, okay, to understand why China cannot sell off all its US debt, we must understand the connection between the US and China and how China operates with the US. Well, these are interdependent countries, like it or not. No matter how they are fighting, no matter how they sanction each other, no matter how they bring up the tariffs, these are real interdependent countries, and both countries need each other at the same time. That's all I could say. China coming up one early morning and say it's dumping all its treasury bonds or its treasury holdings, the $700 billion that the Pinkwit that's holding. It would cause a disrupt in the markets. It would cause what I would call a backlash in the markets. In simple terms, almost 10% of the US debt that's running over 37 trillion would cause panics in high institutes like all the global markets of today. It could cause a dilemma in most of the parts we understand like that. There will be crush of bondings in the US market. But this won't only be in the US market. It will also happen to the panda bonds that are in the China. Because the panic in the US would cause also panic in China, in the domestic market. So in simple terms, we must try to understand why the US would always try its best to why China would always try its best to not just drop off its bonds, because it also cost the home market, because we have what they call global investors. Global investors, these are developing all over the countries. I would say people who are coming from the US, people who are coming from other countries, let's say the panda board. The disruption in the US global treasury would also mean that will also be an indicator for a big sell-off in other countries, also including China. China selling off the US debt has permanently once and for all would mean that there will be a currency dilemma. Well, in forex, there's what they call organization of currencies, how currencies flow and how they are indicated in terms of value. But we all must understand that if China comes up and sells off all its US treasury bills or its treasury holdings, would mean that there will be a currency dilemma. This currency dilemma could lead to things like freezing exports, like global exports will be frozen because currencies will be under disruption. Buying and selling of goods or trading overseas will be slowed down. We'll find a slowdown in the buying and selling of goods through international exports, and this could highly impact China as a biggest exporter, as a global exporter for the rest of the world. In simple terms, it will cause China to be highly disrupted in its ways and how it's conducting the markets in simple terms. And China, this is not the kind of road China really loves to. However, Mikey Free would really love to sell off these all treasury bonds from the US because of maybe the kind of relationship they're having for now, but it still has to pause it because of such kind of fear kind of intention to be taking place. Well, China making such a move will also cause what they call export collapse to the US. Well, China creating such a collapse conducting such a move would cause home collapse to home goods or home exports. In simple terms, for most people think when the dollar weakens and the yuan goes high, it's good for China, but simple in actual sense, it's the opposite. Whenever the US dollar weakens, makes exports for China goods to the US become more expensive for US citizens to be buying. However, this will be conducting a slowdown in the Chinese goods to be let's say, being bought by the US citizens. This would cause much more spikes for US goods to be much more cheaper for the Chinese citizen other than the US citizens, hence causing collapse in the China exports. Such a move by China selling off all its treasury bond will cause what they call capital flights. Capital flights, that means global investors would find themselves in a panic mode whereby if such a move is conducted by China selling off all these treasury holdings at once, would cause what many would understand as a capital flight. A capital flight, that's when global investors or domestic investors, let's say foreign investors that in China, find themselves in a career or a panic mode of selling off their own asset, moving them to somewhere else off from China, hence leaving the China domestic market in abundance, where it will cause higher unemployment, cause a backlash in the Chinese economy. Yes, as China alone. This could be severe to the Chinese economy, well as causing their GDP to be slowing down, and they are causing their expectation for their GDP to be slowing, sometimes headed to a negative. Well, such an act by China would also cause what they call a geopolitical nuclear option. Simple terms, such an act would cause the US to involve itself into a retaliation of let's say sanctioning China and freezing Chinese assets in the US, well as trading trade blocks, a lot of impeachment to China. Something that could stop China from trading with the US, and that's not the road China really love to take. So in simple terms, such move by China, and why China cannot take a such move, it looks at such kind of risk and feels like, okay, I have to step back and think again. Such a kind of a move will also cause what they call a global systematic disruption. Simple terms, it will not only stop China from trading with other countries with only all the US, but will also cause it to stop trading with other countries. In simple terms, such a backlash would cause a lot of panic in bond crashes all over the world, over other countries. This will also trigger export to China, because China does not only trade with the US, but it trades with almost the whole globe. The whole globe today almost trades with China. Having such a high disruption, because most countries are pegged on the US dollar. If China comes up one morning and boom, sells off all its treasury bonds, that would mean that China's exports to the global world will also be slowed. In simple terms, it will find itself either in a deflation situation of an economy, or a slow back, or a real turn back, because it's not about just selling its treasury bill, but it's also about the impact of its own home domestic economy to the rest of the world. So such a move would cause what I would call a big dilemma to the rest of the world. Yes, it could be figured out and be so solution will be always be found, but the time taken to find solution would highly impact China's economy too. Okay, China selling off its treasury bonds once and for all, or permanently, would call is what we understand as a loss of strategic leverage. Well, China holding its leverage as holding its treasury bonds as for now gives it a leverage to the US economy, well as US is influencing its policies to the rest of the country. It rethinks of how China would be impacted in such a new policy that would be brought out to China is important. So to understand what I'm trying to say, that if China sells off this treasury bond, it will lose the leverage to be thought about within the new policies that are being implemented. That's why today we can see Trump comes up and calls out China for the tariff talks, because they know how important China is to them, and how it is important to their economy. So China selling off its treasury bonds once and for all, it would cause the US to think anyhow, or direct impact rules to China the way they feel like, or the way they feel like conducting it. However, China conducting is still conducting or having its treasury bonds over the US may produce what I would call a chance, or the leverage to be given a chance to come up with better ideologies of solution to how the economy should be moving. However, all the factors I just said above cannot stop China from selling off its treasury bonds. We have seen it from 2013 and 2025. From 2013, China was holding over $1.3 trillion in treasury bonds. However, from today of 2025, China is holding around 700 billion US dollars in treasury bonds. To understand how China is moving, China likes a move of stability. It doesn't like a move of causing disruption. China resort to a result of selling off slowly than causing panic in the markets, because it knows it has a big role in the global markets. So in simple terms, it resort to selling off little slowly, but the way they are buying the treasury bonds is way small. And the reason why China resorted to buying IMF bonds, what I would call the gold or metals, silver, gold, and other material and other minerals, other than buying US treasury bonds, because of the relationship between China and the US is always, it looks like it's in a bear road in simple terms. So in simple terms, what I would be saying that I don't think, and I don't hope to see China selling off all its bonds at once, unless the future can tell. Thank you for watching. See you in the next one.